Good evening. This is the Elliott wave update for the S&P 500 for Sunday, July 17th, 2022. The Friday's expiration kind of came off without a hitch and basically fulfilled expectations in terms that the buying was continuing to be fairly heavy, not so much volume wise, but just in terms of price movement. It was pretty strong, with all the markets really finishing strongly in the plus column. Now, what it didn't do is it seemed that it did not change the triangle, nor, in my estimation or my feeling, complete the triangle. So with it finishing on such a very, very strong note as it did on Friday, left a lot of people in question as to what comes next, with the generalized feeling being that, well, the rally will continue. And there are going to be a lot of pundits that are going to speak, or they already have, as to why and what will propel it and what next levels are. And the really strong bulls will pointing to the recent lows at 36.39. And that's it. That's all we get. We're now moving and we're gone. And happy days are here again. I don't really care about any of that, to be honest with you. I think I'm going to continue to focus on the price action. I'm going to continue to focus on what the markets are telling me. I'm going to continue to focus on basically what the Elliott wave pattern tells me, and that's via the market. So right now we remain within a triangle pattern off of that 36.39 low, and that's where I've made my change. Now, you might remember that I had marked this as B, and then I said C, and then I put the D down here. And I thought, I don't really like that because the D broke the low of B, taking it out of the wedge. But then I took a step back today after I looked at that, after I looked at everybody's comments, after I looked at what people's general feelings were. And remember, this is what we're really measuring here within this triangle pattern is human emotional reactions. How collectively traders and investors, et cetera, are going to be moving in or moving out, and to what reason. And right now, this is total confusion, and that's what's being shown via the market. So wave B did end up breaking into its own, which they all will, but this is a very defined and clear, separate A wave down, B wave up, C wave down. Now, with that in mind, I moved that B wave over to here, to which would have been the last Thursday's lows at 37.23. And then what has transpired off of that is that the market has started to move higher within wave C. Now, prior, I had thought that possibility we were in wave E, which would have put wave E being all done right in here. And to tell you the truth, it still might. This could be open up and be one great big island, in the middle of nowhere, on the hourly chart. And it would leave it on the daily chart as well, just not quite as pronounced. So here we are, likely in the second half of wave C. So that's A of C, B of C. Now we're in C of C, and that could be 1, 2, 3, 4, maybe. And we got to get this 5 out. And if that's it, and this is all we get in a C wave, well, then we're likely going to tumble down in a D wave and then back up in an E wave, because I don't feel that the triangle is complete yet. Now that I balance it out against market emotions, market sentiment, desire for different things that people are looking at, how much money did end up getting injected into the markets last week, and what, there could have been multitudes of reasons as to why money flowed in versus flowed out. The largest for me was that because of Friday's expiration, and that all of that was entailed there, and the necessity to get the market to the levels that it was at for that particular expiration. The largest of those being, in terms of components, would be Apple. Apple has been on a tear. Apple made it pretty clear when we reached this low at 32.23 that it was not going to go down anymore. I believe it started back up from like 139, 140. But very quickly, that seemed to surround itself against 145. And that was like two cycles ago, 2 option cycles, so 2 weeks ago. And then after that, then it made itself clear on 46, 47. And then finally, it made it clear going to 115, that's it. And that pretty much was for this monthly expiration. And that seemed to where things go now. You know, I'm not going to break down as to why. I don't really care. It just technically, that was the picture. That's where it's got to. That's where it has gotten to. And we'll see what they choose next. It could very easily go to 52.50. And we don't have Apple's earnings till a week from tomorrow. So now we're building into all the hype and all of the nonsense about, you know, company earnings. And that's the season we've just moved back into. Well, we can already tell it's a confusing season. And again, the C wave to the upside, even if this was a more normal A, B, and a C, I'm not expecting gangbusters, because you can see if I take it back out, it is a very much a bunch of bahooey in terms of structure to fit much anything other than a triangle. So I'm sticking with the triangle pattern on the upside. So I'm also thinking that this should hold. And again, we're not getting any type, to me, for it to break down from here, there has to be a little bit of a something that's going to force it over the edge, something that's going to force a quick change of mind, something that's going to force the buyers to go, oops, I'm not doing that. And they turn and they start to sell. And I think right now, we're still just US. This is just US. And these are just, I think, what coming out of expiration, how you want to sit and what you want to do, and now continuing to do what they need to do to be ready for the week. And likely to be flat, who knows? So in any case, what we got going on, I think we'd have to get into the Asian markets being open, and then the European markets being open, and because it needs to carry. And right now there isn't, I don't believe, otherwise we'd be heading south much quicker than here, that there's any news that's changing anybody's mind other than we still have upside to do. So again, if the market's going to come off from these levels, and this is still going to be a triangle. Again, if need be, we move it back out yet again. A, B, C, D, and I would let it be because it did not necessarily break the bottom of the channel. It did what the channel was going this way, but the channel here was connecting the B this way. So it didn't all suffer all that great of a bust. And I would put the D there, and this is ABC for E, and then we need to thrust. Now, if that happens, and this is declared minor wave 4 complete, the expectation would be the thrust out of the triangle begins before this all swings back to the US opening. So sometime between when the Asian markets open and the European markets take over, and both are in control for a while, there needs to be some serious downside, and it needs to break 38.55. Then it needs to break the 200 SMA at 38.38. Then it needs to break the 20 at 38.23. It needs to break the 200 EMA at 25. And then lastly, the 50, the hourly 50 at 38.17, and just keep going. It needs to break the bottom channel line at 37.35 and just keep going. It needs to break below 36.93, which is over here, and just keep going, et cetera, until eventually it breaks below 36.39. And I'm not saying all at once. But all at once, I would expect a strong enough decline to take it below 37.35. So yes, I'd be looking for something to push this thing down 135 to 150 points. That would be the thrust out of the triangle. I don't think it's just going to roll over and play dead like that. I think there has to be something that clicks everyone's trading mind, changing the direction. Because right now, I think they're just getting themselves prepared that we're going to run back to 39.50. So there's a lot of thought process that goes into that positioning, that goes into that. And to change it, well, we got to change a lot of minds. And that could happen. Now, if not, then this stays the B. This stays A, B, C for wave C. And I would be thinking it could be completing, but it has the potential to get to 3,900, at least up to this zone, up to that channel line, up to this high at 22, I think. Yeah, at 22, and ultimately up and test that 39.50 high. So wave C could go up, spike above it, and come back below it for a wave D. But again, remember, we're now moving into earnings season. So what's it tell me about that? Well, it starts to give me a hint that there's a possibility that earnings will be very mixed. Some very favored, some not so favored, some rotten, some really good. Again, depends on where it falls into what sector and how they all manage to deal with inflation. And if we really want to believe what they're telling us. So again, it's earnings season and they're already kind of coming in mixed. We saw Citicorp report and basically do really well because their trading desk actually performed well. They knew how to trade. All kudos go to Citicorp trading desk because investment banking did not do so well. It suffered across and around the globe, and Citicorp is around the globe. Investment banking around the globe. So, but they came out smelling like a rose. JP Morgan, not so good. But hey, you know, it participated on Friday. Morgan Stanley, also not so good, but they got the stock up. So again, you know, it's what you want to think going forward rather than what you really need to put together for going in the past. But you have to understand what created that past, what created a downside for JP Morgan. Their trading desk didn't trade as well as Citicorp. At least that's to my knowledge of what I read. Nonetheless, let's see what happens. Let's see how this all plays out. Again, I'm waiting for the Asian markets to open. I will continue to look right now for upside. I believe that that is still what needs to come in, and it likely may hold steady overnight in certain areas and not break down and not necessarily break up, and wait for the US to reopen and take over again tomorrow morning. And again, just to reference one more time, downside would need to be quick, swift, and very strong. In other words, it's like, no, we're not going to go back up. We are selling, and there's a reason. So that would be my anticipation, because it would be thrusting out of this triangle, and it's not just going to do it because we all think it's too high. So that's where I'm going to leave all of this. Continue to follow the moving averages. They continue to tell the story. In the S&P, if the 50 gets itself back above, the 50 EMA gets itself back above the hourly 200 EMA, and then the 20 gets above the SMA, the 200 SMA, and then the 50 works its way back up, this thing will be at 39.22 or 39.50. That would be my expectation or my anticipation, because if that moves above there, it's going to give a boost to buying versus a boost to selling. So breakdown boosts to selling, break up boosts to the buyers to come on in, the water's fine. So again, that's what I'd be looking for there for continued upside. If it's going to break down, this turns down, then it's going to break down. Okay, leaving it right there. Our next update will be on Monday, July the 18th.